Good morning and welcome to Morning Markets. Today we're going to focusing on the oil price and what this means for investors. Yesterday we saw the oil price fall significantly, down just over 4% to its lowest level since July in what has been a roller coaster ride this year for the oil price. In the summer, we saw the price rise over 30% after OPEC, the oil cartel, and who control 50% of the total oil production in the world, cut production and extended the period of those cuts. Since then, we saw oil reach a level of $94 a barrel. It came off, falling over 10% after it was announced that global demand for oil was actually weaker than initially expected. Then last month we had a 10% rally after the emergence of the conflict within the Middle East. We've now seen oil fall back down over 10%, giving back all of its gains last month in what has been now a very volatile period for oil. What caused yesterday's oil fall? Well, it was due to data coming out of China. The data showed that global demand was actually weaker than expected. We saw total exports of goods and services for China actually coming well below expectations. In addition, the US dollar, we saw a stronger day for the US dollar as investors' hopes for peak US interest rates eased, making oil more expensive for holders of other currencies. Comments yesterday from various Federal Reserve members, that's the US Central Bank, who pushed back against the market's excitement of peak interest rates, given that the fight against higher inflation is not over. So what does this mean for investors? Well, higher oil prices is ultimately you can think of as a tax. Higher oil prices pushes up or can push up higher petrol prices and also higher costs for goods and services, and that can reduce disposable income. Similar for corporates. Higher oil prices can increase operational costs and weigh on corporate earnings. So with oil prices actually falling, that can actually improve inflation and bring down inflation, which also means that interest rates do not need to go up any higher. So this is a positive. It is a boost to households, it's a boost to companies, and it can also bring down inflation and therefore be supportive for economic growth if the lower oil prices that we've been witnessing can be sustained. That's everything from us today. Thank you for watching, and we'll see you tomorrow.